On May 14, 2026, something historic happened in Washington, D.C. The United States Senate Banking Committee passed the Digital Asset Market Clarity Act in a 15-9 bipartisan vote. This is the single most consequential piece of crypto legislation in American history, and it is now one step away from becoming the law of the land. In this video I am going to break down exactly what the Clarity Act is, what it means for crypto investors, what happens next, and what the realistic timeline looks like. For when this law could actually take effect, this affects every single person who owns or invests in crypto in the United States and beyond. Stay with me until the end because the last section contains the most important information for what you should actually do right now. Let's get into it. Before we talk about what just happened, let me explain what the Clarity Act actually is, because this is the foundation of everything. The Clarity Act stands for the Digital Asset Market Clarity Act. It is a 309-page piece of legislation that was dropped by the U.S. Senate Banking Committee just after midnight on May 11, 2026. Its goal is simple but enormous. It wants to create the first ever comprehensive regulatory framework for the entire U.S. cryptocurrency industry. Right now in 2026, the crypto industry operates in a legal gray zone in the United States. There is no clear law that defines whether Bitcoin is a commodity or a security. There is no clear law that defines how crypto exchanges should be regulated. There is no clear law that defines what rules DeFi developers must follow. There is no clear law governing stablecoins and their reserves. This legal uncertainty has held back trillions of dollars of institutional capital from entering the crypto market because compliance teams at banks, pension funds, and asset managers cannot get approval to invest in something with no clear legal classification. The Clarity Act fixes all of this. Senate Banking Committee Chairman Tim Scott described the bill as follows, and I quote, "This bill reflects serious good faith work across the committee and delivers the certainty, safeguards, and accountability Americans deserve. It puts consumers first, combats illicit finance, cracks down on criminals and foreign adversaries, and keeps the future of finance here in the United States." Now let's look at the four most important things the Clarity Act actually does, because this is what every crypto investor needs to understand. The first and most important provision is the SEC versus CFTC jurisdictional split. Right now there is a constant battle between the Securities and Exchange Commission and the Commodity Futures Trading Commission over who regulates crypto. The SEC says most crypto tokens are securities and should be regulated like stocks. The CFTC says many tokens are commodities and should be regulated like gold or oil. This confusion has created legal chaos for the entire industry. The Clarity Act draws a hard line. If a token functions as a security with ongoing management-led profit expectations, it falls under SEC jurisdiction. If a token functions as a digital commodity within a decentralized protocol, it falls under CFTC jurisdiction. This single provision is what compliance teams at major financial institutions have been waiting for before their allocation committees will approve crypto investments. The second major provision is stablecoin reserves. The Clarity Act requires all payment stablecoin issuers to hold a 1-to-1 reserve of high-quality liquid assets against every token in circulation. Reserve assets are restricted to short-duration U.S. Treasuries under 90 days, overnight repurchase agreements, and central bank deposits. This is a tighter requirement than current market practice. Circle's USDC, which already holds primarily short-duration Treasuries, is closer to compliance. There's USDT, which has historically included corporate paper and money market funds, would need to make significant changes. The third major provision is regulation crypto for startups. Companies can raise up to $50 million per calendar year for a period of 4 years without complying with the full suite of burdensome securities law requirements. This is a massive win for crypto startups and early-stage projects trying to raise capital legally in the U.S. The fourth major provision is DeFi developer protections. The bill maintains legal protections for decentralized finance developers, specifically shielding software developers who do not control users' funds from being regulated as money transmitters. This was a major demand from the DeFi community, and it was preserved in the final text. Now let's talk about what actually happened on May 14, 2026, because the vote itself was dramatic right up until the last moment. The Senate Banking Committee voted 15-9 in favor of advancing the Clarity Act. All 13 Republicans on the committee voted yes. 2 Democrats crossed the aisle to vote yes, Senator Ruben Gallego of Arizona and Senator Angela Alsobrooks of Maryland. Both Democratic senators who voted yes made it clear that their final floor vote would depend on further progress on unresolved issues. Senator Alsobrooks said, My vote today is a vote to keep working in good faith. We still have so much work to do. Senator Elizabeth Warren led the opposition Democrats. Warren has been the most vocal critic of the bill, arguing that it does nothing to prevent President Trump and his family from profiting from crypto while in office. Warren stated that Trump and his family have raked in at least $1.4 billion in gains from crypto deals alone in his first year, and that this bill includes zero provisions to prevent that. The conflict of interest ethics provision is the single biggest unresolved issue between Republicans and Democrats, the section that would limit government officials from profiting. Crypto is outside the Banking Committee's jurisdiction and must be added separately later. Without a satisfactory ethics provision, Democrats have said they will not give the bill the 60 votes it needs to pass the full Senate. Now let's talk about what happens next, because passing a Senate committee is just one step in a very long process. Here is the complete roadmap from today to a signed law. Step 1 is already done. The Senate Banking Committee approved the Clarity Act 15-9 on May 14, 2026. Step 2 is merging the bill. The Senate Banking Committee version must now be merged with a separate version of the Clarity Act that already passed the Senate Agriculture Committee. These two versions need to be reconciled into a single unified bill before the full Senate can vote on it. Step 3 is the ethics provision negotiation. Before the full Senate vote, Democrats have demanded that a conflict of interest provision be added to the bill. This provision would prevent government officials, including the president, from profiting from crypto while in office. This negotiation is the most contentious unresolved issue and could make or break the entire bill. Step 4 is the full Senate floor vote. The bill needs 60 votes to overcome a filibuster in the Senate. With 53 Republicans and 47 Democrats, the bill needs at least 7 Democratic votes. Securing those 7 votes depends almost entirely on whether an acceptable ethics provision can be added. Step 5 is House reconciliation. After the Senate passes it, the bill must be reconciled with whatever version the House of Representatives has passed. Step 6 is presidential signature. President Trump must sign the bill into law. White House has set July 4, 2026 as its target signing date. Senator Gillibrand has predicted the first week of August as more realistic. Step 7 is agency rulemaking. Even after the bill is signed, the SEC, CFTC, and Treasury must draft proposed rules, run public comment periods of 30 to 90 days, revise the rules based on industry feedback, and then publish final rules. This process takes at least a year. Most compliance deadlines are expected to fall in 2027 and 2028. Now let's talk about the risks that could prevent the Clarity Act from becoming law, because not everyone is celebrating. The biggest risk is the ethics fight. Democrats have been crystal clear: without a provision addressing President Trump's massive personal crypto holdings and profits from his family's crypto ventures, they will not vote for this bill. The 60-vote threshold is a hard mathematical requirement. Republicans simply cannot get there without meaningful Democratic support. Senator Kirsten Gillibrand said the first week of August would not be possible without ethics language. The White House has said it will not accept language that singles out the president specifically. This standoff has not been resolved. The second risk is the banking industry opposition. The American Bankers Association has sent more than 8,000 letters to Senate offices criticizing the stablecoin yield compromise in the bill. Banks are worried that stablecoins paying interest will pull deposits away from traditional banks. This banking lobby pressure is significant and could create additional Democratic resistance. The third risk is the calendar. Senators Cynthia Lummis and Bernie Moreno have both warned that failure before Memorial Day could push the next viable legislative window to 2030 or beyond. Summer recess and midterm election campaigns consume congressional time rapidly. Fourth risk is the DeFi provisions. Democrats, including Senator Mark Warner, have proposed amendments that would apply Bank Secrecy Act anti-money laundering rules to non-fully decentralized DeFi protocols. The DeFi industry has strongly opposed this and is watching closely. Now let's talk about what this means for crypto prices and the market, because this is what most viewers want to know, and the honest answer is that the Clarity Act is one of the most bullish long-term developments in crypto history, but it is not an immediate price catalyst. Here is why it is extremely bullish long-term. The single largest barrier to institutional crypto adoption has been regulatory uncertainty. Compliance teams at pension funds, endowments, insurance companies, and major banks have been unable to get approval to allocate to crypto because there are no clear rules defining what crypto is and how it should be handled. The Clarity Act eliminates this barrier. Once the law is in place and agencies begin implementing rules, regulated financial institutions can begin the formal process of adding crypto to their portfolios. the amount of capital sitting on the sidelines waiting for regulatory clarity is genuinely massive. The second major bullish impact is on U.S. crypto companies. Every U.S. crypto exchange, custodian, DeFi protocol, and token issuer currently operates under legal uncertainty. The Clarity Act gives them a clear framework to operate within. This will accelerate U.S. crypto innovation, attract more venture capital to the space, and reduce the legal risk that has pushed many crypto companies offshore. The third bullish impact is on stablecoins. The Clarity Act's stablecoin reserve requirements create a gold standard for regulated stablecoins. Circle's USDC is already close to compliance and could see massive growth as institutions prefer regulated compliant stablecoins for payments and settlements. However, the short-term price impact of today's committee vote is limited. The bill still has a long road to becoming law. Markets have partially priced in the possibility of crypto regulation passing in 2026. A full Senate vote and presidential signature would likely trigger a much more significant price reaction. Here is something very important that very few people are discussing about the Clarity Act and its global implications. The United States is the world's largest financial market. When the US creates a regulatory framework for an asset class, the rest of the world follows. We saw this with Bitcoin ETFs, after the SEC approved spot Bitcoin ETFs in January 2024, Australia, the UK, Hong Kong, and multiple other countries accelerated their own approval processes. The same will happen with comprehensive crypto market structure legislation. When the US passes the Clarity Act, it will send a signal to every other government in the world that crypto is a legitimate regulated asset class. This will accelerate regulatory frameworks in Europe beyond MiCA. In Asia, and in emerging markets, it will also put enormous pressure on the European Union, UK, and other jurisdictions to harmonize their rules with US standards to allow cross-border institutional flows. As Hashkey noted in its analysis of the Clarity Act, US regulatory clarity may unlock institutional adoption of crypto and reinforce USD stablecoins globally. However, they also noted that stricter yield rules could push capital toward Asian markets offering higher returns, meaning the global impact will be nuanced and complex. So let's bring this all together and tell you exactly what to watch and what to do. On May 14, 2026, the U.S. Senate Banking Committee approved the Clarity Act in a historic 15-9 bipartisan vote. The bill is the most comprehensive crypto market structure legislation ever attempted in the United States, and it covers jurisdictional clarity between SEC and CFTC, stablecoin reserve requirements, startup fundraising rules, and DeFi developer protections. The key dates to watch are the full Senate floor vote expected in June 2026, the White House July 4 signing target, and the beginning of agency rulemaking likely to start in late 2026. The biggest risks are the unresolved ethics provision and the 60-vote threshold that requires 7 Democratic votes. For crypto investors, the Clarity Act is the single most important long-term bullish catalyst in the U.S. market. It will unlock trillions of dollars of institutional capital that has been sitting on the sidelines waiting for regulatory clarity. For crypto companies in the U.S., it means the beginning of a clear legal framework that reduces existential regulatory risk. But remember, enforceable rules will not exist until 2027 at the earliest. This is a long-term story, not a short-term price catalyst. Watch the ethics negotiations closely, watch the Senate floor vote, and position yourself for what happens after the law is signed. If this video helped you understand the Clarity Act, please hit the like button and subscribe to the Crypto Skill for daily crypto updates. Drop a comment below. Do you think the Clarity Act will pass before July 4th? Let me know.